Welcome to today's deep dive, curated just for you. Imagine you're running like $1 billion enterprise. You've got AI writing your code, satellites tracking your logistics, but you're still paying for it all the exact same way you did in, well, 1995.
Yeah, paper checks, manual spreadsheets.
Exactly. And hunting down a manager who's on vacation just to get a physical signature.
It's just a total logistical nightmare. I mean, for a massive chunk of B2B commerce, that is actually still the reality today. Legacy systems are incredibly slow. They're, highly vulnerable to fraud.
And they totally obscure your financial data for weeks after the transaction even happens. Your money is basically just moving in the dark.
Right, which makes absolutely no business sense today.
Not at all. And that's why we're looking at a stack of sources on B2B enterprise payments modernization, tracking this massive shift away from those financial dark ages and moving toward a digitized, automated real-time infrastructure.
Yeah.
So, okay, let's unpack this. How do you even begin to fix a system where the foundational plumbing is just that broken?
Well, you really have to start at the edge. To really modernize, a company first has to fix how money physically leaves their hands at the actual point of purchase.
Which brings us to the death of the shared plastic corporate card. Our sources highlight this big shift to corporate virtual cards. So instead of a physical piece of plastic that gets passed around the office, these are dynamically generated 16-digit numbers.
Yeah, and they're programmed with mathematical precision. Software creates them instantly, but it locks them to a specific merchant, a precise time frame, and an exact dollar amount.
It's essentially a digital burner card for corporate spending.
Exactly.
So if the marketing team owes their ad agency $12,500, they spin up a single-use card for exactly that much. And I imagine because it's locked to the penny, if the vendor accidentally tries to charge $12,501, it just bounces.
It instantly fails. And what's fascinating here is how this entirely eliminates rogue spending. Back in the legacy days, if a shared corporate card was compromised, you had to cancel the whole thing.
Oh, right.
And then you face the absolute nightmare of updating payment details for, 50 other software subscriptions tied to that exact same card.
What a mess. But with a merchant-locked virtual card, the blast radius of a data breach is just zero. Right? The card is useless everywhere else.
Exactly zero.
But solving the physical plastic issue creates a totally new problem. Like, if I'm an enterprise spinning up thousands of these digital burner cards every month, how do I actually govern them?
Right.
Without a central nervous system, you'd just be drowning in a different kind of paperwork.
Well, that's exactly why these new spend management platforms were built. They act as this sort of command center, uniting the card issuance, the company expense policy, and AI receipt capture right into one single hub.
Okay, but I have to push back here, though. Having an AI monitor every single swipe in real time, doesn't this instant tracking feel like, corporate micromanagement on steroids for the employee?
I mean, it sounds oppressive at first, I get that, but it actually liberates the employee. Think about a sales executive traveling internationally. The old way meant stuffing paper receipts into your pockets, paying with personal funds, wasting your entire Sunday building an Excel report, and then, waiting 3 weeks for reimbursement.
While praying you didn't lose the physical receipt for the $400 client dinner.
Precisely. But with a modern spend management platform, the corporate policy is baked right into the transaction itself. So you buy that client dinner, you get an instant phone notification, and you snap a quick photo of the receipt.
Right.
The AI uses optical character recognition, or OCR, to literally read the text on the image, pulling out the merchant and the amount.
Wow.
Then it automatically cross-checks that data against your company's $100 per person limit. Approvals happen in seconds because the AI enforces the policy before the money fully clears.
So the HR rulebook basically becomes software code. That is incredibly efficient. But there's a missing puzzle piece here. Once those expenses are approved in seconds, how does the actual accounting ledger update? Because if someone is still manually typing this into a master spreadsheet at the end of the month, we haven't really solved the core problem.
And they aren't. This brings us to ERP-Integrated Payment Workflows. This is where enterprise resource planning systems, the giant financial databases like SAP or NetSuite, they connect directly to bank payment networks using secure software bridges called APIs.
That sounds like a self-driving accounting department.
That's a perfect way to look at it. Let's say a manufacturer receives 500 vendor invoices for raw materials. The AI digitizes those invoices and performs what's called a three-way match.
Okay, what does that mean?
It automatically verifies that the vendor's invoice, the original purchase order, and the warehouse's physical receipt of the goods all line up perfectly.
And if all three of those match up, the system just takes the wheel.
Yeah, on the exact due date, the API triggers the payment. The bank executes the electronic transfer, whether that's a standard automated clearinghouse transfer, an ACH, or a modern real-time payment network.
Oh, wow.
The money moves, and the general ledger updates immediately. It closes out, counts payable balances with literally zero human data entry.
Okay, so what does this all mean for you, the listener? It's pretty clear the days of hunting down missing receipts and manually reconciling ledgers at midnight are finally ending.
Yeah, if we connect this to the bigger picture, B2B finance has completely evolved. We've gone from reactive, high-fraud legacy processes to fully automated straight-through processing,
Right.
where a payment flows from initiation to final ledger update without a single human touch. It's a massive paradigm shift in how capital is controlled.
Which leaves us with one final, kind of wild question to think about. If AI and APIs can now perfectly automate spending, approvals, and reconciliation with zero human intervention, what does this actually mean for the future of the traditional accounting profession? Definitely something to chew on. Thanks for joining us on this deep dive.